Recording. Yes.
All right, good.
Okay.
So last class we were able to look at determination of basis period for accessible profit, and this week we'll be looking at capital allowances. Now, like I said, I will still be going up with the same advice I gave in the last class. The advice is that for some of you who had done something around this course before, most of the things you seem to know might have been outdated. So you need to learn and unlearn and relearn again so that many things will pass you by. As a matter of fact, let me first note the major changes that the Finance Act 2023 has made to this law or to this topic, and hopefully those core areas is expected to be tested this diet. Can you hear me and see my screen?
We can hear you. We can see your screen.
We can hear, we can see the screen.
That's
See your screen.
so probably you should check your network, switch from Etisalat to 9 Mobile. Capital allowance. That's what we want. So I wanted to quickly note some things you have to quickly note before I even go into topic. The recent changes that Finance Act made. Finance Act 2023 that's effective from 2024 year of assessment. For year of assessment has made the following changes to capital. I'll still refer to this later, but I just want to first make them as a matter of urgency. All right, the first is that investment allowance is no longer claimable on plant and machinery and plant and equipment. That's the first thing. Two is that rural investment allowance is no longer claimable on electricity, water and tarred road beginning from 2024 year of assessment. So please note those two major things. I know this thing I just wrote now for many may not make sense, but just note those two things. Good. Now let's go into the topic properly. Capital allowance. For few people in practice, you will notice that in taxation or in computation of profit, we ate something, we ate it like we don't want to see it. And that thing we ate is depreciation, right? And the reason we ate it is very simple, because depreciation is not same across board. Entity A can decide to use reducing balance, and entity B will decide to use straight line basis. Both of them have same asset, but will be claiming different depreciation. And if we make depreciation on allowable expenses, are we together? If we make depreciation on allowable expenses, somebody will be paying higher tax than the other just because he refused to follow the norm in determining depreciation. So we came up with something that could stand in place of depreciation wherein we still acknowledge the fact that the assets you put to use in doing your business is reducing, right? But then we still want to take note of the fact that though the asset is reducing, are you with me?
Yes.
We still want to
Yes.
acknowledge that fact
Yes.
and still grant you a kind of relief or a kind of allowance. That relief we are granting you in place of depreciation is referred to as capital allowance. So you can therefore say that capital allowance is an allowance granted to a taxpayer. Capital allowance is an allowance granted to a taxpayer for granted to taxpayer in place of depreciation. For putting an asset to use in a particular hello year of assessment. Can you assist us to mute your mic? Those background noise will be affecting. All right, good. In a particular year of assessment. Do we all get it to this extent?
Yes.
Yes, sir.
Good.
Yes.
So it means that capital allowance is an allowance granted to a taxpayer for putting an asset to use in a particular year of assessment. So now, what we then want to note there is then the fact that we have types of allowances, or types of capital allowances. Or better still, before I go there, let me go to definition of some basic terms. Beginning of basic terms, because as time goes on, I will be using some terms, so it is just wise for me to explain those terms I'll be using. First is I'll be using the term called qualifying capital expenditure, fondly referred to as QCE. And what does it mean? So the layman, or in literal sense, it simply means capital expenditure that qualifies for capital allowances. Invariably, what I'm saying, are you with me? Invariably, what I'm saying is that they are what you always refer to as non-current assets. I'm in a meeting. Non-current assets. Are you together, please?
Yes, we are.
Yes, we are.
Good. All right, please mute your videos. All right, the next thing we then look at is tax written down value. Tax written down value. What does tax written down value means? We also refer to that as, please mute your video, it is distracting. Honestly, this man is handsome. Just mute your video, Mr. Messi. All right. Mr. Messi no one agree for anybody. Oh. Please mute your video, Mr. Messi. All right. So, tax down value. Are we together, please? So this is what you fondly refer. This is what you refer to as carrying amount. So that is, this is the value of assets after deducting the allowances from the cost of the asset. So that is cost minus allowances. Are we together?
Yes.
Any question? You may want to screenshot it because I want to wipe the board. Can I wipe?
Hold on, let's screenshot.
Okay, noted. Can I go ahead to wipe?
Yes. Yes.
All right.
Yes.
So let's look at types of allowances. We have one investment allowance. Hold on just a minute for me. One is investment allowance. Two, initial allowance. Three, annual allowance. Four, rural investment allowance. Then five, are we together, please? Balancing adjustment. Now, let me explain them one after the other. Investment allowance is an allowance granted to taxpayer once in the lifetime of the asset when the asset is put to use, right? It is only claimable on plant and machinery and plant and equipment. Number next is it does not form part of the tax written down value of the asset. Those are the things you need to note about investment allowance. Is that clear? So number one thing is that it is granted to taxpayer. It is just once in the lifetime of the asset. In the first year the asset is put to use, And there are only two assets that qualifies for capital allowance. Only the plant and machinery and then the plant and equipment. And it does not form part of the tax down value. That means you don't deduct it from the tax down value of the asset. Is that clear? Is that clear?
Yes, it is.
Good.
Yes, sir. It is.
Next one. Initial allowance. This is Awal Ibrahim. We are annotating the screen. I'm sure it's a mistake. This is an allowance granted to taxpayer once in the lifetime of the asset. It is granted at a rate prescribed by the tax authority. It is not prorated down to the number of months in the business period. Is that clear, everybody?
Yes.
Amara, kindly switch from Etisalat to 9 Mobile. If you may so which. Or is it that you cannot hear me? Is it everybody that cannot hear me?
We can hear you.
Can hear you clearly.
Okay, good. So it is an allowance granted to taxpayer once in the lifetime of the asset. It is granted at a rate prescribed by the tax authority. It is not prorated down to the number of months in the business period. Right. The third thing we have is what? Annual allowance. And then what is annual allowance? This is an allowance granted to taxpayer over the estimated useful life of the asset, right? At a rate prescribed by the tax authority. The law provides that the entity should maintain a 10 naira balance in the final year of the asset, or in the final year of the asset. Annual allowance is prorated down to the number of months and the basis period. Is that clear, everyone?
Yes, sir.
If you have any issue understanding anything, please let me know. Because this yes, sir, sounds too much of a cliche kind of. Are you sure you understand what I'm talking about?
Yes.
Good. Good. So the next thing we then have is what? Rural allowance. Rural allowance. Good. Sorry, rural investment account. let me reiterate my point. Investment allowance has been scrapped or is no longer claimable beginning from 2024 year of assessment. But if you have unclaimed investment allowance, you can still claim it. Just that you cannot claim it on an asset you are purchasing in 2024 year of assessment. Is that clear? So real
Yes, sir.
investment, now real investment allowance. This is an allowance granted to a taxpayer who provides or who invests in water, tarred road, and electricity. For an entity to enjoy this allowance, or for an entity to claim, let me use the best word, to claim this allowance, the entity must be 20 kilometers away from where it was originally situated. Now, what that is saying, that's why people will not, businesses will not really feel the impact of pulling off real investment allowance as much as they will feel the impact of investment allowance. Because for real investment allowance, the condition is actually hard to meet. Because 20 kilometer away means if you are driving on 80 kilometer per hour speed, that's about 17.5 to 20 minutes drive. It's about 20 minutes drive. So you have to provide water the water away from you must be 20 kilometers away. Electricity must be 20 kilometers away for you to claim it. If you're also doing third road, must do up to 20 kilometer third road. Is that clear?
Yes,
Is
sir.
that clear? So,
It's not clear, sir.
like I was saying that the condition attached to real investment allowance is actually hard to meet because of the 20 kilometer threshold. The 20 kilometer threshold is something not too realistic because 20 kilometers simply means about 17.5 to 20 minutes drive. That's if you are driving in an area where there's no odor and you are driving up to 80 kilometers per hour. Do you understand what I'm saying? So for those who drive, they will understand what I mean by trying to put that parameter to it. Do you get what I'm saying?
Okay, yes.
Yeah. So that is that about real investment allowance. Then the third one, but it has been scrapped by Finance Act 2023. Investment allowance has also been scrapped. So balancing adjustment. Now, balancing adjustment occurs when you dispose your asset, or when you sell your asset. You say there's balancing adjustment. Is that clear? Now, in reality, when you sell anything, there are two possibilities. Is that correct? Or is that correct?
Yes, sir.
What are the two possibilities?
That there will be a profit or a loss.
That's when it's higher or lower.
Yeah, it is either a profit or a loss. So
Loss.
now, when you make a profit in the sale of the asset, you say there is balancing charge. When you make a loss on the disposal of the asset, you say there is balancing allowance. Let me now put it technically. Balancing adjustment will result into balancing charge or balancing allowance. Balancing adjustment will result into balancing charge or balancing allowance. Balancing charge occurs when the sales proceeds is higher than the tax down value of the asset. Balancing charge occurs when the sales proceeds is higher than the tax down value of the asset. Balancing allowance occurs when the sales proceeds is lower than the tax down value of the asset. Do you get it now? Do you get it?
Yes, sir.
Yes.
So you could do that.
Yes, I would like to put it in the notes, sir.
More.
Sir, please, can you come again?
So we said balancing adjustment will result into balancing charge. And balancing charge is this is when the sales proceeds is higher than the TWDV, that's the value of the asset. Then balancing allowance
in terms of reviewing handicap.
this of course tickets the budget. Please mute your mic. This is when the sales proceeds. Nima, mute your mic. Is when the sales proceeds. This is when sales proceeds is higher. Sorry, lower I mean to type lower than the TWDV of the asset. Is that clear, everyone?
Yes.
Is that clear, everyone? You see that no thinking is required. Yeah. Now, what are the conditions for granting capital allowance? Conditions. There are many conditions, but I will give you just 5 or 4 as far as I can remember. Conditions for granting capital allowances. Number 1 is the ownership of the assets must not be in dispute. All right, that's the first one. The ownership of the assets must not be in dispute. 2, the assets must be put to use in the year of assessment. Are you with me? 3, for assets higher than 5 million, before it was 500,000, but now it has been improved to 5 million, there is need to receive a certificate that's CAFA, certificate of fixed assets. All right, that's for assets that is higher than 5 million. Are you with me?
Yes, sir.
Yes, we are.
Now, so those are the conditions for granting capital allowance. Let me see.
Sorry, sir. It said for assets higher than 5 million, then you need to receive a certificate.
Yeah, certificate of fixed
What
assets
is
from the inspectorate.
certificate of
Fixed assets, CAFA.
Okay. Okay. Thank you.
You're welcome. Are we together, please?
Yes, sir, we are.
Then the next one is
Sir, please excuse me, sir. I have a question, or I need a little clarification on the balancing adjustment. I didn't
okay.
get the definition of it.
There was no basic. I didn't give a basic definition. I said balancing adjustment occurs when an asset is being disposed.
Okay, okay.
Yeah. So the next one is the assets must be used for the purpose of trade. For the purpose of trade, the assets must be used for the purpose of what? Of trade or business. Are we together, please? Are you getting what I'm saying?
Yes, we are, sir.
Yes, sir,
Can
we
go on.
are.
Good. So any
Yes, we
question?
are together with you.
Any question?
No, sir.
Any question?
So I have a question, please.
Yes.
When you say the ownership of the asset must not be in dispute, okay, it's for the ownership not to be in dispute with the tax authority, right?
No. That means there shouldn't be debate as to who owns the assets.
Okay.
There shouldn't be debate as to who owns the assets. If
Oh,
we are not sure if it is your own or if it is if it is under litigation, then there's a problem.
okay.
Yeah.
So if it's under litigation, it will not be qualified for capital allowance.
Provided the ownership of the asset is in dispute, like we are not sure you are the owner, so we may not be able to give you capital allowance, or it's not possible for that period. In fact, for proper litigation, you cannot when an asset is under litigation, you cannot put the asset to use. There will be a court order on the asset.
Yeah.
So that's the issue.
Okay. Thank
Do you get the gist now?
Yes, I do.
All right.
Thank you, sir.
Good. Any other question? So there must be. All right. So the real acceptance of fixed asset. Asset confirm. All right. Any question, please? You can make a screenshot before I clean the board. But the stuff is quite simple and at the same time straight to the point, and at the same time able to get some facts from here.
Hold on, no. You can clean it, sir.
All right. Let me clean the board. Wipe once and for all.
Hold on.
Just munch it or screenshot it, you get the value. Yes.
Okay, thank you.
Yeah. Any questions so far? Can we go?
Go ahead, sir.
Good, thank you. Any checks? So what other thing? I've discussed with you so far the definition of capital allowance, the types of allowances, and the conditions for granting capital allowance. So now let's look at steps to computing allowance. 1. Determine the basis period for accessible profit. 2. Determine the basis period for capital allowance. 3. Allocate the QC. And 4. Compute the capital allowance. All right, good. These are the 4 steps to computing capital allowance. Is that clear, everybody? So let's put this now into practice by doing one question.
Hello, sir. Sorry, please. What's QCA?
Hey, you came late.
Qualifying
Yes.
capital expenditure.
Okay. Yeah.
I want to solve illustration. Just a minute, I'm trying to solve the question so that. All right. Please confirm that you can see a full screen now. My full screen. Good. Good. That's me. So I was saying that we have basis period, and the first thing is that we determine the basis period for accessible profit, right? So the basis period for accessible profit, who can help me with it? Okay, use the comment section so that I won't cause some stories that touch me. Please use the comment section. Give me the first year basis period, everybody. After getting 3 responses, we are 80 something.
But
So
your
after
screen
getting,
is not showing again.
sorry, I forgot. So you will determine the basis period. That's the first class work. So after first three responses,
Please, the screen is not showing.
you should show now.
It's showing now. Thank you.
So
Showing now.
yeah,
Thank
so
you.
please use the comment section. Use the comment section. I want to see the first basis period. After 5 attempts, I'm not asking for the rule, the year. Apply the rule. Do you get, Mr. Jermaine? Just apply the rule. Let's go, let's go. I've not seen any response. It's not that tedious. First, not the year of assessment, the basis period, Mrs. Adenike. So we have 1/6/2020 to 31st March 2021. First attempt seen. I don't know if it's correct or not. So let's wait for the second one. Another attempt. Okay. Okay. You see what I'm saying? Good. All right. Thank you. So thank you. So now the basis period is, let's take the rule again. The basis period for the first year of assessment shall be from the date of commencement to the accounting year end. So you have what did the business commence? 1st of June 2020 to what's the accounting year end? I know period to 31st March 2021. So I will say to 31/3/2021. So the year of assessment will be 2022 year of assessment. Is that clear to you?
Yes.
Good.
Yes.
So for the next year, you will start immediately after the end of the previous year. That's a day after. That's 1/4/2021 to 31/3/2022. And you start the day after 1/4/2022 to 31/3/2023. And here you have 2023. And here you have 2024. Then you have this. The next step is what? Determine the basis period for assessable profit. So you have basis period for assessable profit. Sorry, basis period for capital allowance. That's step 2. And then we said now let me give you the rule. The basis period for assessable profit is not different from basis period for capital allowance, only that there should be no gap or overlapping in the basis period. The basis period for assessable profit is not different from basis period for capital allowance, only that there should be no gap or overlapping in the basis period. So that means for basis period for capital allowance, you start when it starts 1/6/2020 and end when it ends. So you do 31/3/2021. You start the day after to 1/4/2021 and end where the basis period ends. So you do 31/3/2022. A day after, you do 1/4/2022, and you end the day the basis period ends 1/3/2023. Is it clear to everyone?
Yes.
Yes.
Good.
Yes, sir.
Good. So the next thing we now have is step 3 is to do what? Allocate the QC. So allocation of
So,
QC. Yeah, I can hear you. Please go ahead.
hello, sir.
Yes, please go ahead.
Please, I'm not really clear when you were saying the period for. So the basis period for accessible profit is not different from the basis period of capital allowance, except that what? Sorry.
Except that there should be no gap or overlapping in the basis period for capital allowance. Are you with me?
Yes, I can hear you.
So that's what
But
I
I
said.
did not get. But you said, but for what? There was a caveat. There's it. But I did not
There
get the
should
other
be
part.
no gap. The but is that but there should be no gap or overlapping in the basis period for capital allowance.
Okay, thank you.
You're welcome. So here now, allocation of QC.
So I have a question. Oh.
Yeah, please go ahead.
Okay. We have 6 months before we assess any how will I put it?
The
Before we
deadline for
the
filing of
deadline for
returns.
assessment, right? So from this date, the accounting period is ending 31st of March 2021. So I was thinking it will still be assessing that 2021 since we have 6 months. I
Yes.
don't even understand. So why are we assessing it 2022? Why is it not 2021?
The rule says that, the rule says all companies must be assessed to tax on a 3-year basis. So whether or not the deadline still falls in 2021, you still have to put 2022 year of assessment.
Okay.
Follow the year basis.
All right. It's clear.
Yeah. Any other question?
Yes, I have a question, please.
I didn't get you.
I have a question, please.
Yeah, please go ahead.
I'm sorry, I wasn't at the last class. Why is it assessed from instead of December 2020? Why is it taken to March 2021, please?
We are following the new rule. The new rule says from the date of commencement to 31st December of that same year. Do you understand? We are following the new rule. Finance Act 2019 has scrapped the old rule, the old rule you're referring to is from the date of commencement to 31st December of that same year. But now we have to follow the provisions of Finance Act 2019. And the law provides that is from the date of commencement to 31st December to the next accounting year end. Is that clear?
Yes.
Good. So let's go straight to the next thing we want to discuss. So are we together? Are we there together?
Yes.
Yes, sir.
Yes, sir.
Allocation of QC. That's the next thing we want to look at. Any asset, please, you may need to note this. Any asset purchased before the date of commencement shall be deemed to be purchased on the day of commencement. Any asset purchased before the day of commencement shall be deemed to be purchased on the day of commencement. Any asset purchased before the day of commencement shall be deemed to be purchased on the day of commencement. Now, having said that, let's look at the first capital expenditure there. What's the name? Machinery. When was machinery purchased?
February
21.
21.
And that is before June 20. That's before June, Abby.
Yes.
So we assume they bought it June. So we'll put machinery.
Yes, sir.
Are you with me?
Yes.
The next asset they bought is what? More factory building, Abby.
Factory building.
And factory building was purchased February 28th, Abby.
Yes.
Yes.
We assume it is also purchased
On the day of commencement.
So what do we have?
Yeah, but that's like lying, right?
It's not. It's not lying. Because it's the day you put it to use, we will know now. Do you remember? So
Okay, okay.
are you together?
Yes.
Yes, sir.
The next one we have is furniture. Furniture is on June 1, 2020. There's one. Furniture is June 1, 2020. So sorry, there's one network that is frying akara there. Furniture is June 1, 2020, and that's the date of commencement, Abby. So put
Yes.
furniture.
Yes.
Right. Then we have motor car, Abby. Motor car, no, sorry, delivery van.
Delivery van.
Delivery van was purchased January 17. Where's January 17 here?
On the first 2022 year of assessment.
Okay, good. So we have delivery van. So we have motor car. Motor car was purchased when?
June 9.
And where does it fall in the basis period?
Second year of
2023 year of assessment.
Good. So you do motor car. Next one. Office
equipment.
Where did the office equipment fall?
2023 year of assessment.
So we say office. All right. Hello. There's one network that is frying biscuit there. Really?
You are not doing your work.
Calculation of capital allowances for 2022 to 2024 years of assessment. So what are the assets we have? We have machinery, right? We have factory building. Then we have furniture, right?
Excuse me, sir. Please, sir, before you go ahead,
Yeah.
please, sir, for the allocation of qualifying capital expenditure, does that mean we will be using the period for capital allowance to judge that, or the year of assessment?
Basis period for capital allowance will be the basis.
All right, sir. Thank you, sir.
You're welcome. Then what's next asset we have there? I think delivery van, Abby. And delivery van is not in the table. What you have in the table is motor vehicle. And delivery van is within the class of motor vehicle, right?
Yes, sir.
Yeah. Then motor car is also motor vehicle, right? Do you agree?
Yes.
Then you have office equipment, right? Then you have total.
But sir,
Yes, sir.
sir,
I didn't get you.
see, I'm just. Can you hear me? Can you hear me, sir?
Yeah, better now.
So I was just trying to say that if you look at delivery van and probably motor vehicle, should we categorize them together?
Yes,
Because
they are within the same class of assets.
Oh, okay.
So we said investment allowance is 10% of the cost of the assets. Do you remember? And only machinery will enjoy that. Only machinery enjoys that. Then we have initial allowance, 50% for machinery,
Mr. Oye, please mute your mic.
15% for factory building, Admin, it's like it's admin that we should even remove self. Okay, good.
Hello, sir. Please, where
Hello.
did you get all these percentages from?
That's the standard percentage. So in the exam, just flip to the last page of your question booklet, you will have it there. So it's not something you need to cram. Annual allowance is 25%, 10%, 20%, 25%, 25%. All right. Then all figures in thousand.
Excuse me, sir. Please, it's kind of confusing. Since we have delivery van and motor car, and you just wrote only one motor vehicle.
Hold on. I will clear it out now. Hold on. I understand what you're talking about.
All right, sir.
Good. But you agree that delivery van and motor car are within the same class of motor vehicle?
Yeah.
Good. What I just need is for you to agree with that. Provided you agree with that, so don't worry. We will scale through together. Now, let's move on. So we have 2022 year of assessment, right? So for this 2022 year of assessment, you are only picking assets that fell into this basis period. You're only picking assets that fell into this basis period. I repeat myself, you're only picking assets that fall into this basis period now. So now you are picking the cost. So yeah, what's cost of machinery? Mi sọ̀rọ̀.
3,600.
What's the cost of factory building?
4,200.
1,200.
What's the cost of furniture?
720.
720.
And what's the cost of delivery van?
900.
900.
900.
Now we have investment allowance, Abby. And investment allowance is 10% of the cost of the asset. Are we together?
Yes, sir.
Do you remember that when we were discussing it, we said it does not form part of the tax value of the asset.
Yes,
Do you
sir.
remember that? Now, if you put the 360 here, please don't deduct it from the cost of the asset.
Okay.
Do you get what I'm saying?
Yes, sir.
Yes, sir.
If you put it there, but though, if you know you are likely going to be as forgetful as I am, I advise not to put it at all. There's no penalty for not putting it at all. But in case you feel you can manage it without a stepmother effect or negative home support, you can leave it like that. Do you understand?
Yes, sir.
Hello, sir. Hello, please, sir. I have a question, sir.
Yeah, please go ahead.
Okay, sir. In compliance with Finance Act 2023, I think since investment allowance has been abolished by the Finance Act, is there any need to incorporate the investment allowance in the computation of capital allowance again?
We are dealing with 2022 year of assessment in this question. Finance Act 2023 take effect in 2024. And 2022 is still recent. So if the examiner tests anything in 2022, you will still be required to apply the law. But when you see 2024 year of assessment, that's when you are required to remove that. So you always follow the year of assessment to take your decision.
Oh, okay. Thank you very much, sir. Thank you very much.
So investment allowance, right? The next one we have is what?
Initial allowance.
We said initial allowance is once in the lifetime of the asset, and it is computed at the fifth initial allowance rate times the cost of the asset. the initial allowance rate multiplied by the cost of the asset. All right, let me just put it here so that in case you want to review, that's initial allowance rate times cost QCE. Is it clear for everybody?
Yes, sir.
I don't understand all these percentages. I don't understand at all.
The percentages are standard. Like there's nothing to understand. They just take that anytime you see machinery is 50% initial, 25% annual. That's the rule. Anytime you see factory building is 15% initial, 10% annual. Furniture is 25% initial, 20% annual. So that's just the rule. Some people just came up together and gave us that. Do you understand?
Okay, yes.
All right, good.
Thank you.
You're welcome. Do you get it to this extent? So what I just did here is just the same thing I did here is what I did here. That's 15% of 4,200. Here is 25% of 720. And here is 450, 50% of 900. Is that clear, everybody?
Yes, sir.
And what I did here is just to add everything up to give me the total. Have I confused or convinced you?
Confused, sir. You've confused me.
Confused.
What confused you here? Where is the confusion coming from? Talk to me so that we can iron it out together.
Okay, this 1,800, right? I don't know where you got it from.
So that's 50%. Just check this formula now. It is initial allowance rate times the cost. So you know the initial allowance rate is 50%. So 50% of the cost, that's 50% of 36.
Okay.
So that's how we got it.
What of office equipment?
Since office equipment, we don't have office equipment in that year of assessment, so there's nothing. 50% times 0 is 0. Do you understand?
Yes, sir.
Then we have annual allowance.
Sir, excuse me.
I can hear you. Please go ahead.
Yes, sir. Sir, this FB, right?
The factory building.
Yes, sir. How did you get this? How did you get this 630?
Yeah, just do 15% of 40. You should get that 630.
Okay, 15%. Okay. Thank you.
You're welcome. So annual allowances now. Are you with me?
Yes,
Cost
sir.
Yes,
minus
sir.
initial
Yes, sir.
allowance. Yeah, thank you. Cost minus initial allowance, right? Times the annual allowance rate times n over 12, where n is the number of months in the basis period. Where n is the number of months in the basis period. Where n is the number of months in the basis period. Is somebody with me?
Yes, sir.
Yes, sir.
No, sir, I didn't get that, sir.
Do you get this formula? Annual allowance is computed as cost minus initial allowance times the annual allowance rate times n over 12. So I'm not saying n is the number of months in the basis period. Do you understand? You apply that n over 12 where the basis period is less than 12 months. Do you get?
Yes, sir.
Good. So now let's apply the formula. You know, we said it is cost minus Initial allowance, Abi. Are you with me?
Yes, sir.
Yes, sir.
Times the annual allowance rate. Hey. Is somebody still with me?
Yes, sir.
Yes, sir, we're here.
We are with you, sir.
Then times how many months do we have in the basis period?
We are with you, sir.
12.
Are you sure?
10 more. 10 more.
Please count your finger. 6, 7, 8, 9. No.
Okay.
6, 7, 8, 9,
Okay.
10, 11,
10.
12. 1, 2, 3. That's 10 months.
10 months.
10.
Okay.
So that over 12. You will do very well if you have something that looks like this. Right?
Okay.
Yeah. And you know we said tax incident value. Are you with me?
Yes, sir.
Is cost minus the allowances, Abi. But don't forget, investment allowance will not form part of the tax incident value of the asset. So you skip investment allowance. Is that clear?
Yes, sir.
No, sir. No.
Where is the issue from? Talk to me.
Sir, from the formula of the annual allowance.
Do you know the formula?
No, sir.
So the formula is cost minus initial allowance times the annual allowance rate times n over 12.
Okay.
All right, 2023 of assessment now. Do we have any assets that we bought in 2023 of assessment? Yes. Abi? So you say cost.
Yes, we do. Yes,
So
we
you
do.
say additions.
Financial. Yeah.
So did you buy additional machinery? No. You
No.
skip. Did you buy additional factory building?
No.
Did you buy additional furniture?
No.
Did you buy additional motor vehicle?
No.
Yes.
Motor car. Yes. Motor vehicle.
Did you buy office equipment?
Yes. Yes.
Hello, sir.
Yes, sir.
Sorry, please, before you go into the addition, please, how do you count the number of months in the year of assessment or the basis period? How do you count it, sir?
Just count from June to March of the next year. You will get the answer. Like June, July, August, September, October, November, December, January, February, March. Now, does any of these assets qualifies for investment allowance?
Please, I'm still looking for the additional motor vehicle that was gotten in 23 year.
Motor car.
That's June 2021. That's 2020. Okay.
All right, so good. So you now have, does any of those assets qualifies for investment allowance? No.
No.
Sorry, sir. How do we know asset that qualifies for investment allowance, sir?
It's like you came late. Okay, I said only plant and machinery and plant and equipment qualifies for capital allowance.
Okay, sir. Thank you, sir.
You're welcome.
Then office equipment qualifies now.
Office equipment does not qualify. The standard is very clear. I said standard. The law is very clear. Plant and equipment.
Okay.
Do you understand?
Yes.
So initial allowance. So we have what is the initial, that's initial allowance rate, right? No, it's initial allowance rate. Are you with me? That's initial allowance rate times the cost, Abby. It's like I'm alone, no?
Yes, no, sir.
Yes, we are here,
You.
sir. I am with you,
We
sir.
are with you, sir.
Good. Good. We have annual allowance, Abby. For sake of clarity, I will do the new asset first before I go back to the old one. Are you with me?
Yes, sir.
So let me quickly sort out this new asset. You know, we've agreed that an allowance is the cost, right? Minus initial allowance, right? Times the annual allowance rate, right?
Yes, sir.
Yes, sir.
How many months are in the basis period?
2 months now.
2 months. So you don't need to, if you do 12 over 12 is equal to 1. So you don't need to put the n over 12. Do you understand?
Yes, sir.
Good. Right. Then we have annual allowance of the old asset. Now, where are you with me?
Yes, sir.
Yes, sir.
Yes, sir.
Where the asset is initially prorated, where the asset annual allowance is initially prorated, subsequent annual allowance will be determined by, are you with me? TWDV of the previous year divided by n minus 1. I repeat myself. Where the annual allowance of the first year or where the previous annual allowance of an asset is prorated, the subsequent annual allowance will be determined by doing tax equivalent value of the previous year divided by n minus 1. Where n, are you with me?
Yes, sir.
Where n is equal to 100 divided by the annual allowance rate. Are you with me?
No, sir. Yes, sir. Please again.
Sir, please, I don't understand, though.
I'm just saying
Yeah, me too, I don't understand.
is the rule. Just listen up and then get the rule. Do you understand? This thing is rule based.
Okay.
So where the annual allowance of the previous year was prorated, the subsequent annual allowance will be tax system value divided by n minus 1, where n is 100 minus the annual allowance rate. Do you understand it now?
Yes.
Good.
So for any question, sir, for any question we are solving, so our hand, according to what you said, our hand will stand for 100, sir.
Your n is equal to 100 minus divided by annual allowance rate. That's what you determine your n.
Okay. Understood.
100 divided by 25.
Yes.
For
Good.
the
Exactly. So let's go.
But sir, I thought you said n is the number of months in the basis period, sir.
There are two different n's. N in the first place meant that. N in the second place meant this. Yes, you are going to get it. So do you understand? N meant different things in different instances. N in this place meant number of months. N in this place means number of years.
Hello, sir.
Yes.
Hello, sir.
Yes, please go ahead.
Can't we use different notes?
Okay, let me do it this way.
Must it be?
Okay, let me
Must
use
it be
X. Let me use X there. Let me use X. Okay, let me use X. So where X is 100 divided by N minus 1. All right, good. Is that clear, everybody?
Clear, very clear.
Yes, sir.
So we have terminal value divided by 100. Are you with me? Over
25.
good. I just pray that this thing gives me what I want to.
So this office equipment, I thought it's applicable to 2023 year of assessment. It's not showing.
You will see it now, don't worry. Do you get it?
Yes, sir.
So the same, you'll see it now. It's my screen that is doing that. So you have TWDV
And divided by
divided by 100 minus. So 100 divided by 10, right?
100 divided by 25, for which is 3.
It's going to be faster than you. No,
Sir, please, that first one that you wrote, that first old annual allowance, I don't think it's 357.25 because 1,425 divided by 3 will not give us that. Will not give
I'm
us
getting 475.
I'm getting
475. That's
475
what I
too.
have.
Yes, that's what I have
475.
too.
Okay, so
I
let me
guess
just do this way.
yes. Divided by 3 is perfect. Yes.
Okay, good. I just wanted to good. You get the gist. So yeah, with this, so that means the formula I used was wrong. Divided by what?
Divided by 9.
Yeah, good.
Divided by 9.
Get it? Nah.
Oh,
5.
please, so I didn't get the 363 points. This one. How did you get that?
What do you say?
It's divided by 4.
100 divided by 10 gives you 10.
10
10
minus
minus
1.
1 gives you 9. So the terminal value divided by 9 gives you 363 points.
Okay.
So you have this or minus this divided by what time? Divided by 3.
3.
Right. Here there was nothing in the previous year, so you have 0, have it?
Excuse me, sir.
Yes, ma'am.
Please, sir, I don't understand how you got that 475.
1425 divided by 3.
Okay.
TWDV now.
Okay, sir.
Yeah, you're welcome. So TWDV will now be
How did you get the 3?
n minus 1. That's 100 divided by 25. What does it give you?
4.
4 minus 1.
Minus 1. 3. Okay.
All right.
All right, sir.
You're welcome, ma'am. So now to get the tax value to get the next one to be tax value of the previous year.
Sir, please. Why are you minusing 1 always? Why do you
Because
minus 1?
good. That's it. I was expecting that question.
A year has
Now,
passed.
the thing is that we've used an allowance here. So it is 1 year gone already. All right. I think that answers you. Tax value plus the additions minus the allowances. Are you with me?
Yes, sir.
So that yeah, you are adding up all the allowances together. The
divided by 4 and not 3.
but I'm coming. There's an issue. Okay. Okay, this is office equipment.
Divided by 5. Divided by 3. 8, 7, 5.
If somebody gets me, please.
Sir, how about the 363.61?
363.61, where is that?
Under
It's the same way he did it, like the other ones now.
I didn't get you. Where is
That's
360?
written down value. That is for factory building.
Okay.
Okay, yes, so it's just 3272 plus 0.5 divided by 10 minus 1. That's divided by 9. You get the same answer.
Sir, I have another question.
Yes, sir.
Sir, my question is this. This formula you are using for tax within down value divided by x minus 1, is
Yeah.
it going to be the addition of the old asset and the new asset, or the new asset to just be on normal annual basis? Then it's just the old one that will be affected like this. Like I want to.
Yes, only the old one will be affected. The new one is a new asset.
So it will just be charged on annual allowance straight.
Yes.
So we will now add the two together to give us our capital allowance.
Yeah, your annual total annual allowance, not your capital allowance, because your annual allowance is supposed to include your initial allowance.
Okay.
No, so you have 2024 your assessment. Are there any additions? No
And
additions.
sir, sorry, we are using that n minus 1. That tax within that value divided by x minus 1 is because the previous year was prorated, right?
Exactly. If it wasn't prorated, you wouldn't have done that. So annual allowance. Are you with me? Now, this annual allowance now, the best way to do it is just to add the two allowances together. That's the two previous allowances. Do you get it? If you add the two,
I don't get it. I don't
No,
get it,
sir.
sir.
you know, you didn't prorate the first annual allowance.
No, yes, we did not.
Now, you adjusted this one by dividing by the number of years remaining.
Yes.
So the best way to do it for the subsequent ones is just to add the two together.
Okay.
Because all of them are becoming normal now. That's one. Another way you can do it is you can decide to are you with me?
Yes, sir.
You can decide to, for analysis sake, because there's something I'll be showing you in the next class. For analysis sake, let me do old and new. Because if I should do, let me do it old and new. But you know, if you were to be on your own and in an exam situation, my best advice would be for you to add the two together.
I didn't do investment allowance for office equipment.
Office equipment, the standard, the law says only
Machinery.
yeah.
Okay, no office equipment.
Yeah. Only plant and machinery or plant and equipment.
Sir, please, can I take you back a bit?
So far, you're not taking me too far.
Not too far. I just need clarification. For the vehicle, a motor vehicle, we had a delivery van initially done that the tax written down value for the delivery van was 450, right?
Yeah. Yeah, correct.
So we now did no, so not for 5356. So we now did for motor car, which was 13, like starting as a new asset, right?
Yeah.
So my question is the 725. I'm finding difficult to get.
Which 725 is that?
That's the tax written down value for is it the new asset or the combined now?
It's the combined. It's the combined.
Okay.
So that's the old taxes down value plus the cost of the new asset minus the allowances.
Oh, okay. Thank you.
You're welcome. Any question?
I still have question, but I'm coming. Just continue. I will ask. I'm trying to put my. You are done. You want to close for today?
Yeah, that's all. I'm done with it.
Yes, I have a question. No.
Yeah. Go ahead.
Hello, sir.
Oh, I have a lot of questions here. There's a question I have here in one of my hard copy past questions. So this their N, they didn't, unlike this question that they gave us the commencement period of June 1, 2020 to period ended. I think that was the basis you use in counting the number of months in the year of assessment, sir, right?
Yes.
But in this question I have here, what they just gave me, they just said that commence business in 2011. They didn't tell me which month. And then below is the schedule of qualifying capital expenditure on property, plant, and equipment. So they just gave me the date, like factory, I saw September 8, 2016. So I don't know from when to when.
Let me come in. The idea of proration, the only reason why your basis period will not be up to 12 months is if it is in that if it is either commencement or cessation.
Okay.
If you check that question very well, the company commenced 2011. So even the commencement rule covers 3 years. That's 12, 13, 14. So by 15, it is already an ongoing business, and on no circumstance will an ongoing business have an abnormal basis period. So there's no need for prorating the annual allowance. That's why the examiner did not bother giving you the date of commencement.
Okay, sir, I understand you. Now, but in this question, there is new acquisition, and the acquisition, you said is going to be, the formula is going to be for the old allowance, old asset, is going to be tax written down value.
Let me go. I think I get a question. Let me come in now. This formula is only applicable when you prorate the first annual allowance. If you do not prorate the first annual allowance, you don't need the second formula.
Okay, so we are using this formula because this basis period is not up to 12, right?
The first one was not up to 12.
Okay. So because this question is up to 12, then it's not needed, Abi?
Exactly. So just repeat the annual allowances, you get the same thing.
Sorry, sir. Then for the new acquisition, I can see that they wrote some years, like they wrote the let me try and check it. Sorry, please. So the new acquisition, what they did was that to get the annual allowance, I think for furniture and fittings, they deducted. I'm trying to check.
The formula is still cost minus initial allowance times the annual allowance rate.
Yes, I can see cost minus initial allowance. Yes. But now they now divided it by 5. So
because
for
what they did is 100 divided by 20 will give you 5, and annual allowance rate is 20%.
okay.
So that's what they
Okay.
did.
Okay, motor van. Okay. Thank you. I've seen it.
You're welcome.
Yes, sir.
Factory building.
Yes.
Yes, sir.
I've
Please,
seen
is
it.
there a way you can help us to I want to screenshot the solution. So
I will
and I know
send the
that
solution to you. Don't worry. It's your own.
okay, no problem. Thank
You're welcome. Next one. Any
Now,
other
please
question?
just help us move in a bit. I want to see the total capital allowance at the end. Thank you.
I've
Please, I
done
have
that.
a question. I have a
Yes.
question, please.
Please go ahead.
My question is from 2023 year of assessment. The tax written down value we got. How do we treat the tax written down value with the previous year, please?
I'm not sure I got the question.
That. Hello,
Wow.
sir.
It's probably because you're attending the class for the first time.
Hello, sir.
Don't worry, subsequent hold on. Subsequent solutions will expatiate it further. Don't worry. Probably I will just try to make it more elaborate. All right. Sorry, I can hear you. Please go ahead.
Hello,
Hello.
sir. Hello, sir. Before you go, hello, sir.
Yes.
I would like to probably note some. I would like every one of us to note something. And yes, I'm sorry. I needed to just say this. I'm very sorry.
So, is it an observation you want to raise?
Yes.
Let me move to the video so that you won't disrupt others listening to it. All right.
Can I now?
No, hold on.